The Rebel Capitalist Show.
Let's talk about miners for a moment, Ronnie. What have the miners done, and what is their cost basis? I mean, we've had a lot of inflation, so has their costs gone up as far as the cost for them to get that 1 ounce of gold out of the ground? Are their costs higher than the price, lower than the price? How does that work?
Well. Actually, George, I saw like I think 170 mining companies this year. So I had one-on-one meetings. Most of them, unfortunately, only virtually, which is a good thing because it mining companies can save on their travel expenses, and
Right.
those numbers were pretty staggering for some companies, especially the smaller ones. But I have to say, out of those meetings, the majority was really, really positive. I think the companies did their homework. If you have a look at balance sheets of the large caps and also the mid caps, really pristine balance sheets, enormous amounts of free cash flow generation. They're raising their dividends. I've got one chart in my slide decks that compares the valuation numbers like price cash flow, price EBITDA, price book, EV, EBITDA, margins, and some other fundamental data from the GDM index, so the mining space, to the S&P 500. And I think the main takeaway is not only relative to its own history, but also relative to the broader market. Mining stocks are dirt cheap at the moment. Of course, we see that costs are up, but I think that especially when it comes to energy, but also to labor, I think that the companies managed it pretty well so far. So we don't see any explosion of costs.
There's CapEx cycle. That's very. In fact, can you unpack that chart? That seems interesting.
Which one? Sorry.
It's
Cycle?
the gold and silver miners CapEx cycle.
Yeah. Well, that's basically.
So you've got a yellow line, which are the gold prices, and then the aggregate trailing 12 months CapEx. So this is basically what the price is doing relative to how much they're investing in new supply.
This one. Yeah. Got it.
Is that
Well,
correct to assume? Am I right there?
yes. Yeah. So I think that we shouldn't forget that in mining in general, so not only gold mining, we saw a brutal bear market.
Right.
And I think if you talk, for example, to students, I mean, what's like the best industry to go to, and what should you study? I think that mining engineering and geology is probably the last thing that you will hear.
Yeah. And farming.
Yeah, and we also know that if you want to become a successful mining engineer and if you want to become a great geologist, I mean, you need many years, if not decades, on the field. So we're seeing this lack of talent, but most importantly, we're seeing this lack of capital investments. And I think it's this whole greenflation that we're seeing. This is a topic, especially over here in Europe, where everything seems to be about sustainability and greenification and whatever. And most people that I discuss those topics about, I think they don't have a clue about energy markets. They don't have a clue about mining in general, and those people criticizing this dirty mining. I often just ask them, well, did you ever visit a mine? Most of the times the reply is no, and I say, well, I visited many mines all over the world, and I can tell you, if you want to have an iPhone, if you want to have a laptop, we will need some mining. And actually, those companies, especially the listed ones, they really focus on their responsibilities. Those companies are mostly doing a really good job. However, I think that everything that has to do with mining and also, of course, natural resources in general with fossil fuels is something bad nowadays.
Yeah. The politicians don't care about reality. They only care about narrative.
Exactly. It's all about virtue signaling and
Right.
you know, it's therefore I think it's this whole capex cycle will be even more extreme, and we know how long it takes to permit a mine. We know, for example, that's not only in the copper market. We also see it in nickel, for example. We're seeing it in lithium. We're seeing it in many markets where actually we will see enormous supply shortages. Now, normally the market solves that with higher prices. And the cure for high prices is high prices, obviously. But I think this cycle will be even more extended, because as you can see on this chart, we didn't see any major capital investments in the gold industry, but in mining in general. So this also leads me to the conclusion, and I think we should also say that when it comes to commodities, while quantitative easing is basically an asset swap, and we know that it fuels asset price inflation, and it didn't really affect the economy, and it didn't really affect inflation numbers. While if you go into massive fiscal stimulus, and if my thesis is correct that fiscal policy will take over, of course this will have a much more direct impact on the economy, on inflation, and also on the prices of commodities. I mean, over here in Europe, they want to basically copy what the Chinese are doing. It's going the other way around, because we always blamed the bad Chinese for copying everything. Now we are coming up with a European One Belt, One Road initiative, which is, from my point of view, it's a bit naive, to be polite. But those measures that will be taken to improve our infrastructure, of course, they will have an impact on a very tight commodity market.
Right.
So I think this will be one of the major drivers going forward.
I didn't know that Europe was talking about that.
Well, they're talking about quite a lot, and I think
so they're talking about infrastructure spending to stimulate the economy.
Yes. So some sort of a European Silk Road initiative is being planned. It's very early on, but yeah, I think they want to come up with something.
Yeah, so it's like a Green New Deal type of thing that we have here in the United States, which, to your point, if you look at, even if they spend half that much money we'll need commodities that far exceed our current supply.
Exactly. And you know, we crunched the numbers in our last study, and we said, okay, what does have the highest inflation beta? So what works in times of rising inflation? And the result is crystal clear. Commodities have got the highest inflation beta, followed by gold. So I think, you know, if you think that inflation will stay around, that inflation will remain a topic, then I think that commodities and gold are a good choice in that environment.
Yeah, great points. I'm looking at a chart right now that says miners are still in anti-bubble mode.
Yeah.
Can you explain that?
Well, you know, having a look at the gold box, or not, that's the XAU mining index versus the S&P 500, and I use ratios quite a lot, George, because I think, you know, nowadays all markets are massively manipulated. So I think, you know, relative prices and ratio charts give you much more information than absolute charts. And I think that, you know, compared to the S&P, you can just see on this chart, we're actually very close to the lows that we've made in the year 2000, which was a great time to buy miners. Now we made already lower lows. and we've slightly recovered. But you know, I just like this setup with mining companies doing a good job, focusing on shareholder value, having great balance sheets, and they don't need gold prices to go to 3,000. They at the current price, they make huge amounts of free cash flow, and they are paying out nice dividends. So I think this, in combination with sentiment that is really, really bad, and I saw that at most of the investor conferences. Of course, it was also attendance was also affected by COVID, definitely. But I think, you know, from all sectors, I would say that the mining space is probably still the most hated sector of the stock market, and that's what I like in combination with great fundamentals.
I completely agree.